The Dow Jones dropped significantly as trade tensions escalate. Nervous traders were shocked as they had already priced in perfection. The trade deal was guaranteed to go through. It was only a matter of meeting up and signing the documents. Then suddenly everything changed. The world was thrown upside down. Or was it only a dream? You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened in the markets. Obviously, the stock market dropped significantly. You've seen it, but I want to cover exactly what's happening. Let's begin by taking a look at the markets themselves. Here at approximately 2 p.m., we are watching the Dow Jones being down about 616 points. The Nasdaq, the S&P, they are also down quite a bit. By the end of the day, I'm not sure where it's going to be, but it looks like it's going to stay in the red. But I've seen some crazy things happen. Ultimately, the market is reacting to what has happened with China and the US. Dow dropped 700 points as China trade issues escalate. All capital letters, which I've never seen CNBC do, but it is significant because of what had occurred here. We're looking at both sides basically going head to head as of a point that it was supposed to be all downhill from there, but things really changed. The market had priced in absolute perfection. In fact, it exceeded that. And yet, we didn't see that at all. The point I wanted to make here is that when you look at the markets and how they were reacting to the news, it was very suspicious because all of the news that they were getting were from unconfirmed sources. They were from tweets. They were from issues that really weren't actually set in stone. And I kept saying over and over and over again that this needs to be concrete and documented before you go in and price all of that. And I understand the way the market works. I know that it should be basically going towards something. You don't wait until the document's signed and then it goes up 3,000 points. It's not going to work like that. However, to actually go up based on some sort of silly rumor that always consistently, periodically over the last year would be considered false after a period of time. I mean, how many times can people be fooled before they start to learn how it works? These tools are used. It's like forward guidance from the Fed to ensure that they keep things the way they want it. Let's take a look at the technical analysis. Right here we are seeing that this actually fell below, this is the Dow Jones, fell below the 50-day and the 200-day moving average, okay? So obviously there's weakness there. It has been for several days now. We've been watching this coming down. Over the last 18 months or so, the market hasn't done well, if you think about it. Now, people consistently want to point to the fact that, okay, since the end of December, obviously it has done well. We've watched the stock market go up like crazy. We've seen new highs being hit on so many different stocks, but the actual sentiment here is not good. All right, I'm going to show you the EPFR data that I love to show all the time as much as I possibly can. We're going to get into that further. I wanted to touch on the fact that the RSI, okay, the indicator that shows us whether we are overbought, oversold, and right now we are looking at actually being into the territory of oversold. This has come at a time where persistently over and over again, we've watched these markets trading in this range of being overbought. And now things have changed just periodically. This is something that just for a short period of time, we'll see if the plunge protection team could come in and save the day. The Federal Reserve maybe reducing interest rates. Who knows what they'll do at this point. But I just wanted to give you that. It gives us a sense of what's happening in the market now. That doesn't tell us where it's going to be in a week, a month, a year from now, but obviously the trade issues there are one of the biggest factors. Looking at this, China is raising tariffs on $60 billion of US goods starting on June 1st. So that was really the catalyst for this. It was funny because the US increases the tariffs and the markets seemingly didn't react the way that they did when China increased the tariffs, even though there's the suggestion that if China increases tariffs, it doesn't have an effect, but somehow if the US does, then it has a big impact. Well, obviously, that's not the case because the market did not like this. They know what's going on. They priced in perfection, and now they are seeing that it is imperfect, all right? That's just the way it is. Now, we're looking here at some of the stocks that are getting hit hard. Apple down 5.3% as of this recording. AMD is down nearly 6%. Intel is down as well. There are others here that are no doubt taking a beating. Looking at Uber, for instance, it is now at 37.53. I mean, it's down 10% at this point as I watch this just in the day. And if you look at where it was previously, I mean, we're talking about from 45 down to 37 in just a couple trading sessions. So they've lost a lot of value, those people who bought in on day one. Not a wise move. I think that people should be very cautious when it comes to IPOs, but they're coming in at a bad time because of all the trade tensions and everything. So we'll see what happens with that. So those are the few stocks that I've just been watching, and it's been interesting to see how they react. A lot of the Dow Jones would obviously take a hit from this, but there's more to it than just that. This is the editor-in-chief of the Global Times, I believe. China may stop purchasing U.S. agricultural products and energy, reduce Boeing orders, and restrict U.S. service trade with China. Many Chinese scholars are discussing the possibility of dumping U.S. Treasuries and how to do it specifically. Now, this has been a discussion for a long time, okay? So just seeing it here being reported, I don't put too much weight on it. I take it with a grain of salt, however you want to call it. But basically, when I see that, I am then reinvigorated about the potential of how catastrophic it would be if these two sides start to really escalate and they say trade deals off, that's it. They go back home, there's no deal whatsoever, the tariffs keep increasing, and then we have some situation that goes on in the South China Sea, for instance. There is no possibility that the markets will react positively to that, and we know that it would be persistently weak for a period of time, and this could actually flip a few of the triggers, and we'll see what occurs really as time goes on. Okay, I don't want to spend too much time on that. I wanted to just cover this. I have several charts to show you in a row. Worst start for equity fund flow since 2008. Yes, you heard me correctly. Money is leaving the stock market. Remember that I told you this directly from the EPFR's data. Money is leaving the stock market. Okay, we are watching this right now. Worst since 2008. My goodness, stock buybacks are very, very powerful, okay? So you can just see the comparison of the years as you look at this. I mean, who knows, by the way, what will happen by the end of the year. But this is 2008, and you can see 2009, 10, 11 didn't seem to be so good. 12, not the best. 13 was a very good year, and actually 2017 was an incredible year. 2018 is when things started to change, okay? And we could see that this has been persistent throughout. Just wanted to show you how the years began, but ultimately when you look at what's happening right now because of the trade tensions, it's only part of this real big issue that's been happening. And that's really what I wanted to get to for that. Let me move on before I rant on. Yield plays attracting the most inflows in 2019. Here you can see in the bottom right corner, looking at MBS, everybody's favorite. My goodness, we are watching the attractiveness because they need yield. This is what I've talked about on so many occasions. Emerging market debt and high yield as well. And it looks like tech in this instance, I can't tell if it's part of the one from 2018 or 19. But regardless, we know that investors are really attracted to the tech stocks for obvious reasons. The performance has been fantastic. But anyway, that's part of that. Global FMS, that's the fund manager survey, top tail risks, looking at the trade issues, obviously being the number one factor, all right? China auto sales weak despite the stimulus. They have been engaging in a massive, absolutely massive amount of stimulus on all levels that I've been covering in many videos, and yet their auto sales are down significantly, and other things as well. It's not just auto sales, of course. I've been showing you all of that. And we're looking at one of the most important countries as a real bellwether to see what will happen in the future. Korea Stock Exchange, the KOSPI index, looking at it over the last little while, it's been performing very poorly. Basically since the beginning of 2018, it has been doing nothing but falling, but also in the near term environment hasn't done well either. I just wanted to show you that. I'm going to end the video there. If you found it informative, please give me a thumbs up. When you give me a like on this video, you're supporting me. You're supporting this channel and supporting the truth. So I do appreciate that very much. Last but not least, if you want the financial education you weren't taught in school, these two books have everything you need from A to Z, top to bottom. You have all the details in these two. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. 4.2 million cars are sitting unsold in lots today, and it is not being discussed enough. I will mention it again and again and again. You gotta watch this video. See you there.